Good afternoon, everyone. We will start the webinar in 5 minutes. Thank you. Hey, good afternoon, everyone. We are in the month end. I hope that you have many accounts closing works, but in spite of that, your presence made this webinar feel very special. Today, we are stressing upon a very important topic. In fact, we can say that this is a burning issue in GST because every taxpayer irrespective of the size of the concern, they have received intimations from the department named DRC-01A. The common issues mentioned in DRC-01A, we thought that we will throw light on some things, having seen many cases for the past few days relating to DRC-01A. The same template has been followed by the department. As you all would be aware that it is an AI-generated notice. It is not something that the officer generates. It is not something that the officer analyzes and the notice has been given. It is an AI-generated intimation. So, more or less, a similar format is followed for every taxpayer. I would like to emphasize on the fact on why attending to DRC-01A is important, and many other things with respect to DRC-01A. So before that, I would like to give an important update to you all. The first thing is our GST portal has made live the HSN summary of B2B and B2C separately. It was told to be live from April 2025, but with respect to April return, the old forms were followed. But now a separate field in HSN summary has been given. So from May 2025 return, we will see a separate field for B2B supplies HSN and B2C supplies HSN. So it has to be shown with effect from May 2025 return. You all would be aware that with respect to the taxpayers whose turnover is below 5 crores, they have to show at least 4-digit HSN, and taxpayers whose turnover is above 5 crores, annual turnover is above 5 crores, they have to show 6-digit HSN. So the other main thing, not with respect to GST, with respect to income taxes, the long-awaited ITR1 and ITR4 utility has been given today morning by the income tax department, and we have also checked. It allows the portal allows for filing of ITR1 and ITR4 with respect to financial year 24-25. So you all have known that another big update related to income taxes. The income tax returns due date was extended from July 31 to September 15. Subsequent to that, the ITR 1 and 4 has also been made live. So I urge all taxpayers to file the return as soon as possible. I can understand that with respect to many tedious aspects, only in mid of June we will get the 26 AS generated correctly. But to not to very much delay the process, please file the income tax returns as soon as we could file it. Yes. So that's the thing with updates. So the main thing with respect to DRC-01A, issue of DRC-01A, it means two things actually. One is the department is issuing DRC-01A. The another thing is we should handle that issue DRC-01A issue. So there are two things there. So I meant only the department issuing DRC-01A. We have seen a flurry of intimations received in the second week of May, around second week of May. With only 15 days time given, the time is usually 15 to 30 days for the DRC-01A, but we have seen all the notices for which, all the intimations for which strictly 15 days time limit was given. So it was roughly issued in 8th of May to 10th of May, asking us to submit the response within 25th of May to 30th of May. Now also it's being issued, DRC-01A is being issued. So responding to DRC-01A, in my personal opinion, it is very, very important. It is because of the fact that we have also handled many notices, show cause notices with respect to previous years. For example, 17, 18, 18, 19 or 19, 20 or 2021. We have also responded to the notices. But the sad thing, procedural thing is, the department officials are generally preoccupied with something. They have their own set of commitments to handle every day. So when the order due date comes for notices, if you reply, when the order due date comes, they are in a hurry to finish it. And in some points, we have heard department officials say that please go and check it in appeal. I don't have time to scrutinize and analyze whether to drop it or tax it. So that or the state cases or the not so state cases which would be dropped, that can be explained only when the officer has ample time to attend to us and give a personal hearing and spending some time on our case. Because in the last date, when a notice is issued and when we reply, many times we saw that officer doesn't have time and they are passing orders only in the last date or in the last week. So it becomes very tough to satisfy the officer in the notice stage. I'm not saying it is impossible, but we found it very tough across the nation. We have spoke to many professionals also. So it is of utmost importance to close the issue in the intimation stage itself, because many issues are issues which are inherent in the notice itself. Something that in the intimation itself they have listed to consider, so that the difference arises and the tax liability arises. So when we are sure of that, it will be very good if we can prove to the satisfaction of the officer that there is no demand with respect to that in the intimation stage itself. So DRC-01A issue, of course, straightly it will not become an order. Only after DRC-01 it will become an order in DRC-07. But I would request everyone to handle DRC-01A very promptly and to give all the necessary details so that the officer closes the proceedings in the DRC-01A intimation stages. So of course, for someone who asked that DRC-01A has been issued, but we haven't replied to it within the due date, the portal doesn't freeze with the many notices we saw. The portal doesn't freeze after the due date. For example, if 28th May was the due date and you haven't replied within 28th May, the portal doesn't freeze. For some ASM taken cases, the portal froze, and after the subsequent remainder only we could file the reply. But in this case, we have seen many cases where the portal doesn't freeze the reply option after the due date. The portal is live. So even if you have not replied within the due date, if DRC-01 is not issued, we have seen many cases where DRC-01A for the reply, DRC-01 is not issued yet. So the majority of the cases, the department has not gone to the DRC-1 option itself for the financial year 21-22. So even if the reply due date is over, you please mention in the reply itself that you have additional 2 days time to get the reply and submit the reply. We need not be of the opinion saying that the due date is over after DRC-01 is given. We can reply to the department. We need not be of the view. We can conservatively reply to DRC-01A also. And if any documents are given, we can give it in the stage itself and close it. That would be very much advisable with respect to DRC-01A. The notices will be found in services, user services, few additional notice for orders. The notices where it would generally find its way, there only this DRC-01A is also issued. Because you would know that DRC-01B and 01C with respect to GST 3B with one differences and the GST 3B with 2B differences. It is shown in a separate tab. Unlike that, DRC-01A is shown in the same tab where DRC-01 and DRC-07 was historically issued. So please check to that, because in some cases the assessee is not getting any messages or emails also. So you please check with the portal that if you have received any DRC-01A notices, because majority of the claims have received DRC-01A notices, because the department has the intimation has picked something as ineligible ITC and has asked us the response. So even if it is a small taxpayer, for that also DRC-01A issued. So I would request everyone to check the portal for every case, for each and every case, whether DRC-01A is issued. So the reply should be filed in the DRC-01A part A. In part A, the query will be given. The intimation will be given. We should file the appropriate reply in DRC-01A part B. So that is the appropriate form for filing the reply. Actually, with effect from 2020, as per Rule 142, issuing DRC-01A intimation, we call it DRC-01A is intimation. It is not mandatory mandatory actually, because previously when the law came, and DRC-01A concept came, it was mandatory that before issuing every DRC-01, the department has to issue an intimation in DRC-01A. That was the procedure there. But after 2020, the law has been amended to say that officer may issue DRC-01A. So if you have received DRC-01A, you should consider yourself lucky, because it's not mandatory to be issued by the department. So we would have additional days time and additional litigation proceedings to close the case at the earliest. So if DRC-01A is issued, if DRC-01A is not issued and straightly DRC-01 is issued also, then there is nothing wrong with that, because the rule provides so. So it is not mandatory actually. So the common issues which we saw in DRC-01A were the first and foremost issue was reconciliation of e-payable turnover with GSTR1 turnover. See, the intimation has came up with a template saying that they will compare the outward supplies in GSTR1 and the e-payable turnover. With respect to e-payable turnover, they will exclude every job work, every e-payable generated with respect to job work, sales, and that and all they will neglect. The remaining e-payable turnover they will take and they will compare it with the GSTR1. There are two things that they are doing. One, if GSTR1 turnover is more than e-payable turnover, they are treating it as non-generation of e-payable. For example, if you have a GSTR1 turnover of around 7 crores in the financial year and you have generated e-payable for only 6 crores, then for 1 crore they are treating it as non-generation of e-payable and levying penalty, but they are not considering the fact that there are some internal limits for generation of e-payable. Unlike e-invoice, e-payable, only when the value is above rupees 50,000, we have to generate e-payable. Within Tamil Nadu, if we see within state, if we see in many states, within rupees 1 lakh, if the total value is there within 1 lakh, then e-payable need not be generated. So they are not considering that. So the burden of providing that reconciliation with respect to e-payable turnover and GSTR1 lies with the taxpayer, because they have simply take the GSTR1 turnover, they simply take the e-payable turnover and they compare both, and they are levying penalty. There may be cases where you have generated, you have reported that invoice in March 2021 itself, and subsequently in April first week you would have generated an e-payable, because while moving the goods only we have to generate e-payable, but the department is not considering that. So we would have to internally work on it and provide a reconciliation, because non-generation of e-payable, they are levying penalty, which in our opinion it is not to be levied, because e-payable is to be checked only when they are incepting the vehicle. So this is different, because with respect to 21-22 they are giving this intimation, but to be in a conservative approach, please provide a reconciliation of why e-payable was not generated. There may be many reasons, such as the goods may not move sometimes. In some supplies, the goods may not have moved. So there are various circumstances in which e-payable would not have been raised. So please provide a clear reconciliation to the department saying that the GSTR1 turnover and e-payable turnover matches if it is so. So the next thing related to is more complicated, because the e-payable turnover is higher than the GSTR1 turnover. Like in the e-payable, you have generated e-payable around 6 crores, but the turnover reported in GSTR1 is only 5 crores. In that scenario also, the difference is treated as underreporting of turnover, and on the entire part, the tax, interest and penalty is levied. So this is more complicated, because for some cases, you had generated e-payable and you had not reported it as sales in GSTR1. In our reconciliation, we saw many reasons, such as for instead of job work, we had generated the instead of job work, we had generated the intimation. We have generated the e-payable as outward supply itself. So in that case also, underreporting is intimated by the department. So for this also, we have to provide a clear reconciliation to see that the e-way-bill turnover matches with the GSTR1 turnover. So the second thing is more complicated. Whatever it is, we have to provide a clear reconciliation to the department. Until a clear reconciliation is provided, we personally don't think that there will be drop proceeding subsequently, because if not, we have provided a reconciliation, they will escalate it to DRC-01, the same issue, and they will pass an order in DRC-07. So it is better to provide a reconciliation at the earliest, even if you personally think that the reconciliation takes some amount of time. You please get some time from the department and reply to the DRC-01A itself. Please don't make the department escalate it to DRC-01, because then, as I already said, it will become complicated. So finish it in the DRC-01A stage. So the next important issue with respect to e-way-bill is, we have seen many claims where they have put the, while generating the e-way-bill, they have put the GST amount in cess. Inadvertently, they have put for the supply, for their supply, their outward supply, no cess component will be there actually, practically. But in some cases, in some random invoices, instead of GST, they have put it in cess. We have also seen a claim where they have put TDS as cess in income tax TDS as this component in e-way-bill. That also the intimation is picking it up and showing that there is a cess outward in e-way-bill, but you have not reported in GSTR1. For that also, you should prove to the satisfaction of the officer that for your outward supply HSN or SAC code, the cess will not be applicable, and that error is only manual error, and we have duly paid the whatever GST is applicable on that outward supply. So that has to be provided. So the next thing is issue 3 with respect to e-way-bill is, the department, because earlier with respect to financial year 2021 and the erstwhile years, they have not done this HSN-wise summary reconciliation, because before 2021, many taxpayers has not given the HSN summary in the GSTR1 itself actually. So here, what the intimation does is, they take the HSN summary from table 12 of GSTR1, where we are reporting the HSN summary, and they are subtracting the HSN summary of services. And for remaining turnover, they are comparing with the e-way-bill turnover. We have seen in some cases that the service SAC code is inadvertently reported. In that case also, what the department does is, they are subtracting the service turnover from the whole turnover and comparing it with the e-way-bill turnover, as e-way-bill is normally applicable only for the goods movement. So they are providing that reconciliation also and alleging demand. So with respect to this also, we have to provide a neat reconciliation to say that there is no difference. So even if you have reported something wrong in HSN summary, because in the earlier years it was not very clear on who to report HSN summary and whom not to report, so there was some discrepancy. So even if you have reported the wrong HSN or service code HSN instead of goods, you need to provide it very clearly to the department that it is a clerical error with respect to GSTR1, and actual turnover, whatever is reported in GSTR1, for the e-way-bill is generated. You have to provide a neat reconciliation to satisfy the officer. So the next thing they come up with is GSTR9 issues. So in the previous years also, this issue was there. In 21-22, they are comparing pretty much everything what we have given with respect to GSTR9. I don't think the same. No, the GSTR9, there was no clarity. When we filed GSTR9, we had some limited clarity. That argument, I don't think, would be applicable in 21-22. I don't say that it was applicable in the previous years, but 21-22 is like almost the 5th year. So I don't think the department will buy that, saying that we have done a clerical error in GSTR9. If so, if it is a genuine critical error, we can anyway say to the department that should not be an issue. So what they do with respect to GSTR9 is, they are comparing the GSTR9 and GSTR9C tax payable. In GSTR9C, in a table we have given the rate-based liability that they are comparing with table 5 of GSTR9, where we have reported the entire outward supplies and the tax attached to it. So in many cases, what we saw was in one table, either in GSTR 9C or GSTR 9, the taxpayer has reported the RCM liability. In one table, they had missed to report that. It is to be reported actually, but some taxpayers has missed to report that. So mostly the differences only arises from that table. So they are comparing the outward supply reported in GSTR 9 and the rate-based liability that we have given in GSTR 9C. Both they are comparing. So for that, we should again provide a reconciliation saying that why there is an exact difference with respect to both liabilities. So the next thing is short paid of tax on taxable supplies reported in GSTR 9. So whatever we have reported in GSTR 9 as tax payable in table 9 of GSTR 9, that they are comparing with the GSTR 3B outward liability. So in GSTR 9 table 9, we would have the sum of table 4 will come actually. So it would ideally include the outward supplies and the RCM supplies, inward RCM supplies. Both will be included in that table 9 of GSTR 9 that they are comparing with GSTR 3B tax paid. So with respect to that, in our opinion, it should ideally match because we always have a check from the 1718 itself. We had a check saying that these both things should match. Although the department has not given state communication anywhere saying that these two should match, but that was the normal understanding of GSTR 9, the table 9 tax provider and whatever is paid in GSTR 3B should ideally match. So that they are comparing and that is something because if you have provided higher tax payable in table 9 of GSTR 9, it means you are admitting that you had higher outward liability. So we should see that why exactly the difference arises and then give a detailed reply. But in our opinion, it is little difficult because in GSTR 9 itself, we have admitted that liability. So only if we are able to provide a P&L wise reconciliation or a trial balance wise reconciliation for that year, the department would be in a position to drop the demand saying that whatever it is in financials, we have paid that outward liability. So that is with respect to GSTR 9 with GSTR 3B. The last part is with respect to GSTR 1 with GSTR 9. So there are some cases where the taxpayer has correctly paid the liability in GSTR 3B, but has underreported in GSTR 1. Either it would have been like a debit note what they would have increased the price, that credit they would not have given, or like some issue was there. But in our opinion, it doesn't have revenue impact because if you have paid correctly in GSTR 3B, you have paid the tax liability. You have incurred the tax liability what is to be paid to the government. So only underreporting of GSTR 1 will not attract any liability unless a procedural liability is there. So for this also, why there is such a difference, we have to locate the month in which there was a difference, and if we would be able to provide a correct reconciliation between the same, this would be easily dropped with respect in the department point of view. So the next thing what we were about to tell is while starting GST update itself, I was about to tell you, we have a WhatsApp channel. We daily post the updates that regularly come, not only with respect to notification or circular updates. We daily post the case laws that is highly relevant for the industry. So this is the QR code for that. I will also send you the PPT after the webinar. So please follow our WhatsApp channel to get regular updates. So the next thing with respect to is whatever we have seen till now is only with respect to outward supply. So the next thing what it was excess claim of ITC. With respect to ITC, they figured to compare various tables on which every taxpayer ideally they are getting notices in this putting the excess claim of ITC. They had got various checks in the intimation saying that first they are comparing GSTR 3B and GSTR 9. Whatever we have put in GSTR 9, whether it is rightly claimed in GSTR 3B. First they are checking it. Then whatever if we have discussed in table 6J, the difference part is table 6J in GSTR 9. Whatever we have disclosed in it, that in intimation that is given as payable, but the department is not considering one fact. The thing is, With respect to GSTR9, when it came, the heading about table 6 was, table 6 in GSTR9 was with respect to ITC available during the year. So some professionals were of the opinion that even though they had claimed lesser ITC in GSTR3B, which would get reflected in table 6A of GSTR9, auto-populated and get reflected in table 6A of GSTR9. In table 6B you would have known the GSTR9 format, and table 6B to table 6I, we can ideally feed any figure we want. So whatever we are feeding, the bifurcation of input services and capital goods we are giving, many professionals were of the view that whatever it is in books only, it should be given there. Whatever we have taken, we should not give there, because the heading read as ITC available during the year. So whatever for purchase I have read during the year, I am ideally, the ITC is available for me to utilize. So many professionals were of the view that even we have taken less ITC in GSTR3B due to various factors such as non-payment of tax might be, it would not have reflected in our GSTR2A. The goods might not have received internally to us, or any other condition with respect to section 16 we had not satisfied. In that scenario also, many professionals were of the view that the total ITC in books should be fed in table 6B to 6I. So in many cases, because of the difference, a negative difference came in table 16. For that also, the department has issued intimation saying that is excess claim of ITC. So please be clear on what is given, because whatever is given in GSTR3B and whatever got ultimately reflected in electronic ledger only we have availed. So anything other than that is whatever we have reflected in GSTR9, we all know that if something is reflected in GSTR9, it will not automatically get credited to our electronic rate ledger. So with respect to GSTR9, if you have some figure that is higher than GSTR3B, please be very sure on what is the exact difference, and please be mindful of the fact that you can always quote that we have availed only this much ITC. There might be some over-reporting in GSTR9, over-reporting in books, whatever it may be, but we have availed only this much in GSTR3B, which got ultimately credited to electronic rate ledger. So the difference as such in GSTR9 need not be reversed actually, in many circumstances. So please be mindful of the fact that you are reconciling with the GSTR3B and not with respect to GSTR9. So the next thing is the department, in the intimation, there are many allegations such as excess claim of ITC, but what they fail to consider is they are not considering the table 4B of GSTR3B. Of course, I understand that circular number 170 with respect to how we should write table 4B, what permanent reversal we should show in table 4B1, and the temporary reversal we should show in 4B2, and the reclaim we should do in 4B1, all came from the financial year 22-23 only. To be very precise, from August 2022 only, with respect to circular number 1. But before that, we were traditionally reporting whatever reversal it is, we will reverse in 4B. Even in some cases, credit notes, debit notes also were reported in table 4B. Table 4B of GSTR3. So the department is grossly ignoring the fact the same thing which was done by GSTR9. GSTR9 also, if you look at very closely, table 6A of GSTR9 captures only the gross amount which we claimed in GSTR3B. It will not account any reversals that we did in 4B. But 4A minus 4B, whatever is reflected in 4C, only gets ultimately credited to electronic credit ledger, previously also, after 2022 also, now also. So whatever it is in table 4C only ultimately gets reflected in our electronic credit ledger. So the department in the intimation didn't consider the fact that we have reversed some ITC in table 4B. So they have considered only the gross ITC which we have claimed in GSTR3B with the ITC which we have fed in GSTR9. Another thing with respect to GSTR9 also, table 7 talks about reversals, table 6 talks about ITC, table 7 asks us to fill up the reversal details. That also is not considered actually. So ideally, the department has ignored all the reversals which we have done in GSTR 3B and which we have shown in GSTR 9. So please, again, I am emphasizing the fact to say that whatever it is in electronic credit ledger only you should reconcile, not with respect to what you have shown in GSTR 9 or 9C, because it doesn't get reflected in our electronic ledger. So whatever it is in table 4C of GSTR 3B, that only translates to electronic ledger. So that in mind, start the reconciliation with that point. I think in majority of the cases that will close the case in itself. So the next thing is the department has always, this is traditionally followed by the department has always taken GSTR 2A of the old version. We could never find which version GSTR 2A they are taking. Actually, they freeze the table 8A of GSTR 9, which is auto-populated at some point before filing of our GSTR 9. They are freezing at some point and they are taking now and comparing. But what if some taxpayer has filed the GSTR 9 with respect to financial year 21-22 in October? In that scenario, the GSTR 2A might not have, GSTR 8A, the table 8A of GSTR 9 might not have been updated till 30th November 2022. So in that case, you please download the current GSTR 2A and reconcile. Of course, there is a time limit to claim the ITC with respect to Section 16, Section 4 of the CGST Act. But please download the fresh GSTR 2A now or table 8A now in the GST portal and then do the reconciliation. Because in many cases, the taxpayers file the return belatedly, but they have ideally filed. Whatever it is in GSTR 2A, we can claim. Because there should not be any issue in the coming years as GSTR 2B came into play from the subsequent years. But with respect to 21-22, 22-23 alone, we should deal with this issue because GSTR 2A is not a static thing. It is frequently updated. So whenever you do a reconciliation, you get an updated GSTR 2A and then do a reconciliation. So this is the common thing. The next thing is the very common thing that every taxpayer gets. Because from nowhere, from some taxpayers, the intimation has picked them as doing something as ineligible, and they are giving us an intimation saying that these credits are ineligible. The probable alleged hits are with respect to the ITC's insurance, catering, precious metals, beverages, cement, paints, works contract, vehicle, like that, engineering, like that. Many hits that department has classified and has issued an intimation asking, see, from that supplier, it is not, it might not be the fact that you have inverted only that supply what they have provided in GST portal. To be very precise, even what is in the GST portal, what they have given in HSN code in GST portal, that is also not reflected. For example, Mr. A is saying that he is providing insurance in that SAC code. While giving this intimation, we are not sure on where they grouped this Mr. A as insurance because there is some other head they are grouping him under. They are grouping him under vehicle. So we have seen many cases where it is not at all grouped well also. So they have given a list of invoices to say that everything is ineligible ITC with respect to that. In that scenario, we should provide only a detailed invoice-based list to say that what and all we have got from them, and then also there are also discrepancies saying that we would have not claimed the GST or DB itself, because once the intimation or notice is received by the taxpayer, the first thing that we will think is how to prove it, the ineligible ITC which was given by the intimation as eligible ITC. But in many cases, we forget the fact that in the first place, first we should check that whether we have claimed that ITC or not. In many cases, we see that there is a substantial difference between 2A and 3B. In 2A, there would be a figure like 5 lakhs, and for example, 5 lakhs, and in 3B, they would have claimed only 3 lakhs. Here, the alleging demand is only 1 lakh. With respect to 1 lakh ITC, they would have alleged. So, please see, sorry. please see whether we have claimed it in the first place. Please see the GST or 3P workings, because the ITC breakup we have never given to the department thus far, because only the total ITC we feed in the GST or 3P. So please take our GSTR workings and check whether we have claimed the ITC for that invoice in the first place. If it is not claimed, then there is nothing, no liability will arise, because you have already not taken the ITC. Otherwise, if it is an eligible ITC, you should give the invoice and you should check why it is eligible. So, like I already told, we should not be simply taking the 2A and 3B comparison and share that excess in 2B is this much and the ineligible ITC what you have ordered is only this much. So we don't have demand. That also is not admissible, because there might be some other ITC which they have not alleged as ineligible also. So subsequently, say some audit or inspection comes in the future period and they ask this ineligible ITC workings which you have reversed in table 4B of GST or 3P. In that scenario, you cannot give a different list. You cannot give a different list for this notice and an audit notice. So please be mindful. There may be three things there. One thing is, it might not have been eligible. You might not have taken it also in GST or 3P. The second thing is, it might be eligible, but the department has alleged it as ineligible. So you should prove to the satisfaction of the officer that it is eligible. The third thing is, it might be ineligible, so you might ideally need to reverse it. So prolonging it to something till the order stage is not admissible. If you know that it is ineligible, you can very well reverse it. As you all know, whatever ITC is reversed, if you have balance in electronic ledger, it is well and good. If you have any ITC in that, you can reverse it and no interest will be applicable on that. So this is the main part that everyone is getting intimation of, because there will be some parties from whom we would have claimed this services or goods. So in that scenario, there is a list of around 4 to 5 pages. The list is given from this GST number you have claimed this much ITC. From this GST number you have claimed this much ITC. So this is more of a working part. You should be very mindful when replying to this excess claim of ITC. So as I already told, here also the intimation does not factor what you have reversed in table 4B of GST or 3B. So if ITC is eligible, please prove to the officer why it is eligible, because their vehicle ITC is generally ineligible, but a vehicle dealer, for him the ITC is eligible. So in many cases, but the department doesn't synchronize the fact what the business he is doing and what he is getting. They are simply sending the AA generated notices. So in many cases, ITC will be eligible. Please dwell more on the fact on why such ITC is eligible. If it is not eligible and not available, give to the satisfaction of the officer that it is not available. You give the breakup of the entire table 4B of GST or 3B, then the assessing officer will be satisfied that you have not applied such a ITC. So the last part with respect to ITC is we would have received supplies from received supplies from a supplier. His registration would have been cancelled subsequently. In that scenario, the department asks us saying that he has filed GST or 3P with nil turnover and he has not paid tax, so you should reverse the ITC. Because the section clearly says that if tax is not paid ultimately to the department, the recipient cannot claim ITC. So in this scenario, the subsequently cancelled dealers or the cancelled dealers, when you are purchasing the cancelled dealers, for them the ITC is alleged to be ineligible. So you should prove to the satisfaction of the assessing officer saying that you have given whatever the amount due to the dealers, the suppliers, and you have genuinely received the goods. You should prove the satisfaction of the officer, but this is yet to be tested in the court of law, because if the government could not recover from the supplier, they are ultimately coming to the recipient. But there are a Supreme Court judgment saying that whether the department has first initiated the proceedings with the supplier in the first hand. So only after non-recovery from the supplier happened, then only they can come to the recipient. First itself they cannot come to the recipient. So there are many case laws supporting it. But whatever the supplier is, a detailed breakup is given for which supplier the GST registration is cancelled, but you have avoided the ITC. Detailed breakup is given in the annexure. Please check that and at least prepare documents, at least arrange the documents in such a way that there is a GRN with respect to it. There is an e-waybill that we have received the goods, we have paid the amount through bank. At least in our end, we can say that we are very genuine and we have claimed the ITC rightfully as per section 16. There is some doctrine of impossibility involved because we can check only if the supplier has filed the GSTR 1 properly and it has reflected on the invoice. We cannot check the two in the financial year 21-22. We cannot even ideally check whether he has included the turnover in his GSTR 3B and has filed it. Of course, we can check whether he has filed the GSTR 3B or not, but we cannot check whether he has included our turnover or not. Even the department cannot see it because only the net amount will be given there. So, with respect to this, if we have sufficient documentation to prove that we have genuinely purchased it, I think in the at least if not in DRC-01A, at least in the further proceedings, we will get a relief. So the last thing is with respect to late fee. There are two late fees. We all know with respect to GSTR 3B, whenever you file belatedly, in the subsequent month the late fee is levied, and only after you paying the late fee through electronic cash ledger, the total allows you to file the GSTR 3B. But with respect to GSTR 1 and GSTR 9C, there is no late fee. In GSTR 9 also there is a late fee. With respect to GSTR 1 and GSTR 9C also there is no late fee. So in that scenario, the department has imposed late fee. Of course, there are various extensions in the COVID period 2021, 21, 22. So please check whether the late fee is calculated correctly, because in many notice intimations we saw that the late fee was not calculated correctly. They have not accounted the extensions. So you please check whether they have calculated the late fee correctly. So if they have mentioned they calculated the late fee correctly, then it would be payable. Of course, there are some sections which the tax professionals ponder upon to say that in GSTR 3B only late fee can be levied. In GSTR 1, late fee cannot be levied because of the fact that the GSTR 1 is not a return in itself. It is only a statement of outward supplies. GSTR 3B is only ideally written. So for GSTR 1, the late fee might not be levied, but it is yet to be tested in the court of law. With respect to GSTR 1, they are charging interest also. So in the case of interest, you should see two aspects. In some cases, we would not have fed it in GSTR 1, but would have correctly reflected in GSTR 3B. In that scenario, no interest is leviable because we have correctly paid the liability when interest. So there would be no interest. Ideally, there would be no interest. Another thing is, if you have electronic credit ledger, you can take the protection of Rule 88B, which says that only if you pay through cash ledger, the demand will be payable, the interest will be payable. So in other cases, we should check up on the facts on why it was filed belatedly, and then we should file a prompt report. Another thing with respect to this is GSTR 9C. Similar to GSTR 3B, while filing GSTR 9 itself, there is a clear late fee. There is a clear late fee. Only upon payment of which you will be enabled to file GSTR 9 in the portal. But with respect to GSTR 9C, there is no such late fee at all. There is no such late fee. There is a relaxation given in the January, saying that if you had already paid GSTR 9 and if you had paid the GSTR 9 late fee, and you are subsequently filing GSTR 9C within 31st March 2025, in that scenario, there will be no late fee for GSTR 9C. But that time limit is now over because it was not further extended also. It was active only till 31/3/2025. So, with respect to GSTR 9C, we are getting a separate table intimation saying that 200 per day the late fee will be levied. Of course, please check if it is subjected to a maximum limit of 0.25% of turnover, 0.25% in CGST and 0.25% in SGST. So totally 0.5% of turnover. So we have received many, we have seen many taxpayers coming to us saying that there was huge late fee levied, around 1,80,000 late fees levied, 1,60,000, 1,80,000 late fees levied. So with respect to this also, we should give a prompt reply to say that why GST 9C is filed belatedly, or we can give a request letter. First thing I would suggest is file the GST 9C immediately, because in the portal it doesn't ask the late fee. Unlike GST 9, the portal doesn't ask for the late fee with respect to GST 9C. So file the GST 9C immediately. Then only if any sort of waiver is there, if anything is there, we will be in a position to avail the benefit. So file the GST 9C immediately. Then you can reply to this notice also saying that you have filed the GST 9C. So requesting you to waive the late fee of GST 9C. So the important thing in the only we should remember while filing reply to DRC-01A is, first thing is you should check if there is jurisdiction, if there is proper jurisdiction, if the officer is authorized to issue intimation to us. So that is the first thing. Second thing is if signature is there. So in some cases we saw that signature is not there. You please put up in the intimation stage itself. You please while replying to the intimation stage itself, of course, if we go to courts, the court may take us adverse time to say that when there is no signature in the intimation, it is not valid, so the whole proceedings are cancelled. But I don't think in this case they will do that. But at least get to the knowledge of the officer saying that this intimation is not valid if there is no signature. Recently also, Jharkhand High Court had a case with Mr. Sandeep Kumar Singh saying that if there is no signature in the intimation or notice, the notice still is invalid. So while filing reply to the DRC-01A, we should remember a few things. One thing is we should try to, as much as possible, we should try to disseminate the facts, because whatever you give in DRC-01A, we should ideally try to stop it to get it translated to DRC-01, because then the opportunity given by the law with respect to DRC-01 itself we have not availed of. So that would be not ideal for in the scenario of taxpayer. So while filing reply to the DRC-01A itself, please be mindful, please prepare all annextions and file a prompt reply if any invoice copies are to be given, because unless you do you prove to the satisfaction of the proper officer, we don't think that he will drop in the DRC-01A stage itself. So even though the officer has not responded to us filing in the portal, you can reach out to the officer asking if he needs any other details, because without seeing DRC-01A response, we see many cases getting translated to DRC-01. So please also intimate to the officer that you have filed the response, and if any further documents are needed, you please prove the satisfaction of the department and try to close it in DRC-01A stage. Yes. We'll go to the questions now. Your voice not clear. I think it is corrected, sir, after that. Thank you. Kindly share PPT. Yes, sir. We will definitely share the PPT after the webinar, sir. I am told that issuing DRC-01A is discontinued. Is it true? Sir, with respect, Rule 142 is still there, sir. As I already told, issuing DRC-01A is not mandatory. So they may issue DRC-01A. It is at the discretion of the officer. We have generated, Harish sir, we have generated invoice with e-invoice and e-waybill. Later we realized that we used same customer wrong location GST. Now customer is not accepting invoice because of the wrong used GST. Yes, I'm trying to understand the question, sir. I think you have generated the e-invoice and e-waybill Wrong location we have given, right, sir? Yes, sir. The cancellation amendment we are beyond the time limit, sir. You should again freshly generate an invoice and e-waiver only, sir. I think no other recourse is there. Not with respect to customer accepting, because in future also, like 21-22, we might receive an intimation saying that the details there in e-invoice and e-waiver are wrong. So you can generate it again. Same invoice number in e-waiver it will not accept. So you should give a different e-waiver number. You also please have a back paper saying that it is actually duplicately generated, because after 4 years we may never know why it was generated again. Yes. So whether can be. Yes, sir. Sir, Canton ATC is eligible, sir. If the Factories Act mandated more than 210 employees are there, we should provide a canteen facility. So, Canton ATC is eligible, sir. There are various advanced ruling with respect to that. So, Canton ATC is eligible because in Section 17, subsection 5, Clause B itself, there is a separate proviso saying that when something is mandated by the department, whatever is said about food, beverages, health insurance, membership of a club, whatever it is, or cab services, whatever, if it is mandated by the mandated by the government, then the ITC is eligible. So, if more than 500 laborers are working, ITC. Prakash, if cash paid can be substantiated purchase. Sorry. Yes, sir, definitely, sir, definitely. If we are within the rules of the income tax law and everything, it is definitely provable, sir. It is definitely substantiable. But one thing is, in many cases, we saw that the officer doesn't believe us. The officer says that, no, if there is some bank transaction, I can come to a conclusion saying that you have definitely paid to them. If you say that you have paid cash, the cash is approached now also we can make for the previous year, sir. So that is the only issue there, sir. But there is nothing, for example, 7,000 rupees we have given cash means there is nothing against us to say that we should not pay any cash to any supplier. So it is there, but it is tough to prove, sir. If it is a bank transaction, it is very easy to. If payment not made, can we substantiate the purchase? Sir, there is a clear provision saying that if you have not paid to the supplier within 180 days, you should reverse the ITC itself, sir. So there's a clear provision saying that. So if you have not paid till now, you should definitely reverse the ITC only. Is there any way to find e-waiver details from GST site, not from eBay? Yes, sir. Sri Kumar, sir, in GSTR1, if you go to the GSTR1, there will be, if you go to B2B, there will be separate button saying that import EWB data. From that, you can find the e-waiver details, sir. GST officers are saying that it is not possible to alter 1A in one. Is it correct? Rathanarishwan, sir. Sir, this we have been hearing since ages, sir, because to get everything translated into DRC-01, they are of this name excuse saying that they cannot alter anything from GST-01A, but that is completely not the intention of the law, sir, because DRC-01A itself issued only for the fact that something which is not at all tenable from the point of view of department, there is no revenue impact from the point of view of the department, it should not get translated into DRC-01A. It should not get translated into a show cause notice. So that is the very intention of the law, to have a separate form called DRC-01A. So that is we had shared that too, sir. But we firmly stand by the view that they should alter something in DRC-01, because we have given reply and we had also proved to his satisfaction. The excess ETC is there, but invoices reported late waiting. Yes, sir. In section 50, there is a specific specific wording saying that if you have filed the GSTR1 return belatedly also, if you have shown the invoices in the corresponding period only, interest is not there, sir. So if you go by section 50, interest will be there, sir. But you can try the protection of rule 88B, sir, saying that whatever it is not paid through cash, interest is not leviable. like that you can take a stand, sir. Actually, I won't say that it is a winnable stand, but we can check that rules. Sir, whether I think Surya answer, I have answered it. Impairment of asset, demanding. Sir, no, sir. No, sir. That is definitely that ITC impairment of assets ITC is definitely eligible only, sir. Forget to cancel e-waybill in time, sir. So nothing could be done, sir. Please take a note of it. Only when subsequently a notice comes, you should be in a position to reply that it is a not non-supply e-waybill, sir. We have not supplied ideally. We have generated e-waybill and forgot to cancel it. That's all we can do, sir. Because there is no enablement in the portal to cancel the e-waybill after something. Customer. After given reply to DRC-01A, shall we intimate to proper officer even after the due date gets over? Yes, sir, definitely. Pradeep Kumar, sir. I think we should do it definitely, sir, because in many cases, if the taxpayer or the authorized representative doesn't come, it gets translated to DRC-01, sir, because only while making an order, the officer follows us and gets the reply or gets the clarification, sir. With respect to DRC-01A to DRC-01, many officers are of the opinion that whatever it is, whether reply is given or not, if the officer doesn't attend to us in person and intimate to us that they have replied promptly, they are converting it into DRC-01, sir. So to be in a safer view, of course, the law doesn't mandate that, sir. But to be in a safer view, I would always advise taxpayers to intimate to the proper officer after filing a reply in DRC-01, sir. Gopal Krishnan, sir, we have not filed GST 9C for financial year 21-22. They have given notice for late. Sir, straightly, please let me know if you have filed a GST 9C now, at least now, sir. We should check with the facts of the case. We should check whether we can waive the late fee or not. So we can get the late fee waived, sir. I expect sample reply format along with sectional rule reference. So also expect relevant case laws for each point in notice. Also, you must one important. Sir, I will give you a sample reply also, sir. Not all an issue. You please share me the mail ID. I thought that explaining what are the issues in DRC-01A would be the ideal thing that everyone would want in the webinar. If you need a sample reply, you can definitely use it. You please share the mail ID, sir. You will share the sample reply of the majority of the cases, sir. Because the same template is followed that we can use. So you please share the mail ID. One customer GST was cancelled by Suomoto on 1/7/2023. However, still GST is updating TDS figures. So TDS has a separate registration, sir. It might be in that point, but I'm not very sure. Once I will be able to get a neat facts of the case, I will be able to comment on it, sir. So for DRC-01 also, we will plan a webinar, sir, because in the coming months, we'll be getting in the next month, we'll be getting DRC-01, sir. For that also, we will definitely have a webinar, sir. Transport vehicles used for business purpose, ITC, which is eligible. Yes, sir, it is eligible. So only if you are using it for transportation of goods, it is definitely eligible to raise, sir. Surya Narayan, sir, thank you very much, sir. Thank you very much for the appreciation. Yes, Karthik, sir. Sir, I am doing trading activities, taxable and taxable department. ITC reversal demand right step. But exempt goods purchase and sales also. Sir, one thing with respect to common creditors, Karthik, sir, they are taking the entire ITC as common credit ITC, sir, which is definitely wrong, because they don't have the bifurcation to say that which is common ITC from our GST 2A. So they are taking the entire ITC which we have claimed the GST 3B as common credit ITC, and they are asking us to reverse the ITC. That is definitely wrong, sir. But we should we should only give in DRC-01A Part B that what is the common credit ITC, what are all the expenses with respect to which common credit ITC will get attracted, and whether with respect to that we have ideally reversed the ITC. We should only check and prove that, because I have also seen many notices that they are taking the entire GST 3B ITC as common credit ITC. What if we have bill copy of ITC claim from cancelled dealer? Yes, sir. Dilip Kumar, sir, as I have already said in the webinar, it is to be tested in the court of law, sir, because if the department has not ideally collected the amount from the supplier, then after taking all the efforts from the supplier point of view, then they can come to the recipient, sir. That's what the courts have said till now. But from our side, what we can do best is we should have the clear ITC that bill copy, sir. Whether we have received promptly the goods, whether we have paid through bank, that we can take and give, and from the point of view of that, we can find the replacer. That's all the best we could do, actually, because we cannot check, as I already said, we cannot check whether he has filed GST 3B, whether he has included my invoice in the GST 3B, that we can never check, sir. So this is what we can do, but it is to be tested in the court of law. Is there any facility to check GSTR1 return filed by us for any whole financial year in GST portal? So in GST portal, there are many softwares supporting that, sir. But you are saying that to check GSTR1 return filed by means per se, you mean whether you have filed GSTR1 means in search software itself, we can check, sir. We can go and check. If we give the financial year, it will give whether you have filed for or yes. What figures that we cannot get, sir. Only tax figures we get in the tax liabilities and comparison, sir. Otherwise, you have to use the software, sir. Then only you can get the taxable value figures. Sir, what will do if we claim IST input, sir? Sir, I'm not clear. I'm not sure whether it is the whether it is a separate new question or same question from which you have asked in point of your cancel dealer. Cancel dealer means IST input also the same procedure only, sir, not something different. There, an input service distributor will be there. He will be segregating it to branches. So that's all the difference. There is not much a difference with respect to cancel dealers there. One customer GST was cancelled by so amount of how much GST? I think this I have already written. Thank you. At the time of filing GSTR1, we had come across some mismatch of data. Hence, we used resetting. Sir, e-wables, e-wable data wiped out from the portal. So that will not happen. So they will compare the total value only. So that is not an issue. But the issue is, if you are an e-invoice generator, if you have to mandatorily generate e-invoice as a taxpayer has to generate after reaching the proper flow. So in that scenario, your customer will not get the IRN code in their GSTR1 return. That is the main issue there. So in that case, the department might in future issue a notice saying that you have not generated the IRN itself for the GSTR1 output service what you have shown. So in that case, it's possible. The e-wable point of view, I will not be sure, but the e-invoice, I think it will be issued, sir, because we have a separate product in Z-Tax Clinic, sir, GST assured. In that, we are comparing these, sir. We are actually comparing 50 parameters for every company to give a GST assured report, sir. So in that scenario, we are comparing the e-invoice data and GSTR1 data. We have automated it from the GSTR portal so that we give to every client, every GST assured client their monthly report. What are all the mistakes they did in GSTR1? What is to be corrected monthly? So in that scenario, we are seeing it. If we can see that, we can see that the department will definitely see that, sir. So in future, As of now, they are not issuing notes for that, but in future, they will definitely check that what all supplies in GST R1, whether a corresponding IR number is there, they will definitely. E-waybill is not used but forgot to cancel online. So there is no other go, sir, because you cannot cancel it now. So you should have a separate note saying that why it is not cancelled. When future if some notices come, you should repeat promptly. That's it. Penalty under section 129 subsection 3 is only during interception, Kumar, sir. It cannot be levied coming to your office or issuing a note to your office. Only when the goods are intercepted, they can levy penalty under section 129. Madhu sir, is it compulsory to raise e-waybill more than 50,000 bills where customers not required e-waybill? I think you are asking about the interstate supply, sir. Yes, sir. Even if the customer is not asking for an e-waybill, if he because with respect to e-invoice only, there is a category B2B, B2C. Sir. B2B e-invoice is B2C for more than 500 crore company, QR code is raised. E-waybill is not at all based on recipient. Even if the customer doesn't want an e-waybill, we should definitely generate an e-waybill, sir, because that is for our sake. We are moving the goods, so we should generate an e-waybill. Kumar, sir, please connect to me, sir. I'm not understanding the exact question. I have seen your message also. I'm not understanding. You're saying that the dealer has cancelled the registration, but in spite of that, his GST period is reflecting in our GST 7A, right, sir? I personally think that his GST, because for TDS, a separate registration will be there, sir. If you feed the TDS GST registration, there will be a separate GST number, sir. If you feed that in the search taxpayer result, it will show as tax deduction. Might be that registration might be asking. So that is the only case. If I understand your question correctly, that is the only case where GST period is alone reflected and his main registration is being cancelled from the court. Although I think I have already responded to it, 50,000, more than 50,000, we should definitely generate an e-bill. Sir, I think I told. Yes, sir. Definitely. I got your mail ID, sir. I'll definitely revert to you within tomorrow, sir. Kumar, sir, thank you. Thank you for the appreciation, sir. Rajesh, thanks. How department find that vendors doing a catering business when the vendor is registered with the machine? Sir, I think this question we also have, sir. I think they are taking from the e-waybill, sir. I think they are taking from the e-waybill, sir. So, if they had mentioned erroneously sometime in e-waybill, they are considering it some other business, catering business, for example, and they are issuing notice, sir. Because if we check the search taxpayer option in the portal, so different HSN is showing for the same party. So I think they are accessing e-invoice or e-waybill where HSN is given, HSN or SCT code is given. From there they are issuing notice, sir. Sir, air conditioner purchased by the ASCII and installation done at business place, which is eligible ITC. Yes, sir, if it is business place, it is definitely eligible. If you are installing it in guest house or home, it is not eligible, sir. Whether it is trading or manufacturing, if you are installing it in a business place, it is definitely eligible. Sujata Hari Krishnan, hi. Yeah. Thank you for the appreciation, sir. Kumar, sir, please reach out to me, sir, because I have already responded. I think you are again having the same question. I'm not very sure that I understood the question. Please reach out to our team. We'll definitely answer. Can we expect amnesty for the year 2020-21, sir? No, sir. We are not expecting, sir, actually. I think you are telling about that SPL 0102 forms. We are not expecting it, sir. because the government is always strict about the deadlines that was given. Last year also for GST 980 was given, that was not subsequently extended. So they are not looking for extension, I think, sir. But I think we will be getting a GST Council meeting in at least next month, because from January there is no GST Council meeting at all. So might be in next month, if there is any extension, we may know then. How to reverse ITC against exempted supply? Magesh, yes. Sir, with respect to Rule 42, the proportionate ITC, the common credits we should take. Sir, common credits means rent ITC, audit fees ITC. These are all telephone expenses ITC. These are all common credit ITC. That you should reverse proportionately with respect to exempt supply, sir. For exempt supply, specifically, if you procure any goods and GST is charged on that, in that case, ITC should never be taken in the first place. The department should allow to file returns based on books of accounts. Yes, so you may be right, sir, but we are way past that era, sir, because whatever it is in 2B only we are getting, sir. In 2B only we are eligible to claim ADC as per law also, because there was a discrepancy in law saying that there was no clear indication on why only 2A ADC should be claimed, but now it is very clear, sir. So I don't think we will go back to that good era, sir. Now, whatever it is in 2B only, we will be able to pay. In books, it is very simple. Okay, so whether an old ITC or common ITC only you should do, sir. Old ITC only with respect to, for example, if you are selling an exempted product, with respect to such exempted product, specifically that exempted product, if you incur any expense, and the ITC is available on that ITC you should not wholly avail. For example, if you are selling onions, the exempted product you are selling onions, for that you are purchasing onions, for the commission is given to a person who is starting GST owners. So the commission is given only with respect to the sale of onions. So that is fully exempted. So for the commission also ITC should not be exempted. These common is what I told with respect to telephone expenses, audit expenses, for that you should because only the commodity, the proportionality. So if you are getting notice to pay penalty under Section 1, general penalty of rupees 50,000 for delay filing of GST or TV, even for 1 day in filing. Sir, we are probably of the opinion that only late fee can be levied with respect to that, sir. Penalty, of course, general penalty is there, sir, but they are already penalizing us by providing a late fee. So I think that won't stand, sir. That won't stand the court of law. I have shared my library here, sir. Solutions of CEO Syntax.com or solutions of Syntax.com. Sir, whether asking paid on legal services for banks on reversal, 50% to be reversed or 100%. 50% to be reversed. The banks are eligible to avail 50% ITC, or they should calculate and reverse the common common reversal they should do, sir. Otherwise, 50%. Okay, sir. I think that's all with the questions, sir. Thank you all for your patience with me. So, with respect to DRC-01A, if you have any queries, you please reach out to zentaxclinic.com or solutions@zentaxclinic.com, and you can also call the numbers, telephone numbers on which our team will be able to assist you. So, thank you for the active participation. There were many questions. I'm very sorry if there were questions. Thank you very much. See you in the next.